What's up, everybody? It's Coffee with Teresa, the channel where we talk about business, finance, and entrepreneurship. And in this video, I'm going to go over what's going on this week on a macro level, as well as doing a technical analysis on the S&P 500, the Dow Jones, the IWM, the VIX, and the Qs. So let's get started. So first things first, let's go over what we can expect for this week. There's not a whole lot coming out on Monday. We have the Treasury budget coming out and 3 earnings. More notable is Tuesday because we have this CPI report. The Consumer Price Index is a measure that examines the weighted average of prices of a basket of consumer goods and services such as transportation, food, and medical care. Now, if you paid attention to the PPI report on Friday, the Producer Price Index, we shot up a whole percentage point from the month of March, and that's after going up a half percentage point in February. That's the highest we've been in 9.5 years, so expect the CPI to be up as well. We also have 6 earnings reports, including Toyota on Tuesday. On Wednesday, we have the Beige Book Report, which is a survey that the Fed does amongst its 12 districts to see how it's doing, the economic conditions and the outlook, etc. And this is done 8 times a year, and one report is coming out on Wednesday. Another report that's important are mortgage applications, so look out for that. And Jerome Powell will also be speaking on Wednesday from 12 to 1 p.m. For earnings on Wednesday, we have 15 earnings reports. Most notably, you have a lot of banks: Wells Fargo, JP Morgan Chase, Goldman Sachs, First Republic Bank, Johnson & Johnson, and Bed Bath & Beyond as well. On Thursday, we have the jobless claims reports coming out, retail sales, business inventories, and the housing market index. So all of that will be important. On Thursday, we also have 12 earnings reports, including Bank of America, Citigroup, BlackRock, as well as Rite Aid, Pepsi, Lockheed Martin, and Delta, among others. And on Friday, we have the Consumer Sentiment Report done by the University of Michigan. We also have 16 earnings reports, including PNC, Ally, Citizens Group, BNY Mellon, and my old workplace, Morgan Stanley. So if you want a full list of earnings, dividends, and splits coming out, I made an Excel for you that you can follow in the description box below. I'll try to leave one of these every week. It does take a little while to do, so just take a look at it because it's really helpful to keep track of the events that's happening for this week. Let's move on to the technicals and what the market is showing us for next week. So right here, you're seeing the Dow Jones, DIA is the ticker, and last week I said we'd most likely break out from this resistance line here, which was the high back in March. And we did end up doing this early in the week, and we stayed above it for the remainder of the week. This previous resistance now turns into support, and it seems that the 20-day moving average has moved up with that as well. So the moving averages move with the price as the price starts to move and stays in certain levels. So the 20-day moving average can start to work as a support. So that's important to keep an eye on from a risk management point of view, because if the market were to ever fall below that 20-day moving average, then the next level of support is right around here at 320 for the diamond. So just keep that in mind. For next week, I believe, or for this week coming up, I believe we can still go higher because of the price action on Friday and the increase in volume. I'm going to put a price target of around 340 before we see any sort of significant pullback, so just keep an eye on that. The sort of puzzling thing at the moment is with the smaller stocks, since they are severely underperforming. And as the money has come out of the small stocks, I think it's safe to assume where it's been going into, which is in very large tech stocks like Microsoft and Apple. The late surge in the market on Friday, the end of the day, where we tend to see some of these spikes both up and down, is exactly why you have to be disciplined. If you did well on a trade, don't be too greedy, don't stay too long. That can be hard to do sometimes, but it's definitely safer in this type of market. And now if you take a look at the IWM, which is the Russell 2000 ETF, we're basically on target for what we talked about last week. I mentioned that it looked like it was forming a head and shoulders pattern. We said it'd move up, but eventually pulled back, which is what it did right here. And so we can look out for further formation of that shoulder. We have the initial shoulder here, the head right here, and now we're starting to see the other shoulder. Also notice that the Russell 2000 couldn't close above the 20-period moving average, even with the increase in volume and price action in other ETFs around Friday's close. So the 20-day moving average is now going to act as a resistance, meaning also that the forecast for the IWM is going to be lower because it couldn't rally. So I think by next week we could test a low around 214 to 215. And we'll see how it holds initially, if it bounces off that level or breaks down further here to this neckline. Remember that when drawing this head and shoulders pattern, you have this neckline at the bottom that connects these points, and this is going to serve as a crucial support level, because if this starts to break this neckline, we can start to see much lower lows. So let's move on to the VIX. Notice that the VIX was down. It closed in the red, but look at how the CCI is moving up as the VIX is going down. That is bullish divergence, and you get this when there continues to be a move down, but the CCI is going up. And you can also do this on the RSI, it's just a matter of preference. But what this shows is that less people are selling at these low prices, and normally when the VIX gets to this extreme level and the CCI drops below this level and starts to bring itself back up, a good entry can be right as it starts to cross upward above this line again. And also when it's outside of a Bollinger Band here. And for those of you that don't know, quickly, when you apply the Bollinger Band study, the middle line is the moving average, and normally the upper and lower lines are 2 standard deviations from the moving average. So when this price is towards this lower band, the stock is thought to be oversold. If you combine the Bollinger Band with something like the RSI or the CCI, you can use the two together to find an ideal entry point, and we're just about there on the VIX. This would be a point towards the outer side of the lower band, and with the CCI starting to pull up. Also notice there is a small gap here that we'll need to fill. Gaps tend to act like a magnet when the price starts moving in the direction of the gap. I'm still going to maintain my stance on the VIX that volatility will start to pick up. I think it's going to fill this gap and possibly even move higher to test the highs back around the end of March, right here between this upcoming week and the weeks ahead. And the logic for this is that it's oversold on all levels technically. One other really important note that I briefly mentioned earlier is that the PPI reports came out, which is the Producer's Price Index. And this is significant because it's a measure of the average changes in the price received by domestic producers for their output, and basically it's a measure of inflation, 2011. So this is extremely inflationary. So they're not saying it now, but just imagine what the Fed will have to do. The Fed says they won't increase interest rates for a while, but if nothing's done, we're definitely going to see high inflation. So they're kind of stuck between a rock and a hard place. So if interest rates starts to go up, that's obviously going to be bearish for the markets, and the VIX will start acting as an indicator for all of that action. And so remember that the VIX generally moves opposite to the market, especially the S&P 500, which is largely overbought as well. In addition to this, if you guys look at unusual options activity, which you can do at barchart.com, there were a lot of out-of-the-money calls being purchased in the VIX. So, and you can do this too by buying calls for the VXX, okay? Go to your broker platform and do the simple option chain analysis and see where heavy flows are in certain strike prices. Check out what people are buying. You'll notice that for VXX, there's heavy call buying around the $16 strike price for the end of April. So just keep that in mind. So let's move to the S&P 500. The ETF is SPY. So in the last 2 weeks, it had a pretty unbelievable move. You can see one candle after another. I'm not sure it's ever done this before. That's like 11 straight days in a row, which has just been a phenomenal run. But now the oscillators are kind of telling you that it's starting to turn down. And look at what we have right here. There's a gap to fill, which will act as a magnet when price starts to move down. And in terms of the SPY, we're at a point now where 411 is support, which is quite a move considering where we started at the beginning of the week, where we broke out at 400. And we still have to see whether this extension that has just begun continues or if there's a near-term pullback. My belief is that in the next couple of weeks, this gap will fill. It may not do so this week, but I'm going to say 2 weeks to be safe. And that's my initial price target. That's right around 397. So it's a good idea to buy some out of the money puts for protection. Make sure you're practicing proper risk management. Buy the 398 or the 395 puts for 2 weeks out. It's relatively cheap right now, and that will serve as insurance to protect your downside. That's what I did. You can also do put spreads so you don't lose as much money as time goes by. It's whatever you prefer. So let's move on to the Qs. So now the interesting thing in the Qs is that it had a similar move to the S&P 500. For the Qs, we are right at all-time highs, and notice the way it's developing. So if it holds this channel, we can potentially get to 350 sometime within the next 2 weeks, which would align with earnings season. And then the other case may be that we're due for a pullback. We have to take into consideration that the Qs gapped up higher a bunch of times, and you have a gap here, here, and here. That's 3 gaps below the price where it's lying. So here's a strong support level around 305, which will take us right back to the beginning of March if it does pull back. If you look at this on a monthly chart, there's a huge bearish divergence on this moving average. Notice this is opposite to what's happening to the VIX, which has a bullish divergence. So a bearish divergence is when the price moves higher, but there's no strength in the move. And it reflects this in the CCI or the RSI. So the CCI doesn't move with it. It actually moves lower. So what does this tell you? It means that less people are willing to buy at this price level. Look at the volume here too. That's extremely low. So keep an eye on the Qs. So buying out of the money puts for a couple weeks out, for the end of the month, or even spreads would not be a crazy idea. So that's my update this week for the markets, you guys. If you found this video helpful, consider dropping a like since it really helps out the channel. In my next video, I'm going to go over what we can expect for Bitcoin this week. So be sure to subscribe so you don't miss out on what's going on with cryptocurrencies, since this is supposed to be a big week for cryptocurrencies in general because of Coinbase's IPO. So see you soon, guys.